Hey, what's up, everybody? Welcome back to the Coast to Coast Traders podcast. I'm Flexing Joe.
I'm Robbie.
How you doing, Robbie? How's your weekend been?
It's pretty good. How about yourself?
Not too bad, man. Just trying not to freeze to death. It was minus 13 on the ride into work this morning, so it was pretty chilly.
Yeah?
Pretty
You
chilly.
notice I'm at the Olive Garden right now?
Yeah, man. You want to pass the breadsticks or what?
Well, so actually, I just thought it was funny. I saw somebody else doing something similar, and I actually went to Red Lobster on Friday, but I thought, Olive Garden's logo is when you hear your family, and I kind of just feel like, when you're with the Coast to Coast Traders podcast, your family too,
Hell yeah.
Maybe the best podcast in two continents with the best traders in the world, maybe. And, I thought we were just going to have a good time, so. Oh, and I also wanted to show you this shirt. My mother-in-law got me. Don't worry, I got this. I watched a YouTube video.
Bro, that's perfect, dude.
Pretty appropriate.
That's so perfect. That's like, you remember all those commercials? Hey, don't worry, I stayed in a Holiday Inn Express last night when they need like a doctor or somebody. That's exactly it. Mm-hmm. That's exactly where you're at. So, Well, perfect then. So since you watched the YouTube video, bro, what's going on with the market right now? It's super volatile.
It's nuts, man. So anybody who's been paying even the slightest amount of attention to the news or the market should know that we're in the middle of a tariff war, particularly with U.S., Canada, Mexico, China. China's always been on the radar, but more recently it's been Canada and Mexico. Yep. And from my understanding, going back to Friday, actually, it looked like we were pushing up quite hard because we just filled that gap on the NASDAQ. But later on in the day, there was a press secretary, or the president's press secretary started talking. And I think what happened is that they decided to enact the tariffs immediately, basically starting Saturday the 1st.
Yep.
Yesterday, right? And so with that said, as soon as the market got wind of that, it was like dump city. And here we are in the new session. We gapped down, what was it, 400 or 500 points. And we're doing some kind of interesting stuff right now, but curiously, we bounced around January 15th CPI open print. So it's going to be a very interesting week.
Yeah, for sure. And I think if I remember correctly, we have the JOLTS on Tuesday, which if you look back at the last JOLTS report on that Tuesday in January, it was a huge sell-off following that news too. So yeah, I'm really anxious to see how that plays out. But it was a crazy week too last week because when we were doing our podcast episode, we were dropping off that DeepSeek news, and then it just continued to like plummet overnight. And I remember waking up the next day being like, all right, like this is it. The bottom is in for this move now. And, it was a grinder, but it did take all week. And we got back up to where we started only to sell off again now on tariff news. So, it kind of makes me think, though, that once we get back up to these levels, we probably will squeeze and get like right through it because, third time's the charm sort of to break it. But who knows? We'll see what happens, right?
Yeah, for sure. I agree quite a bit. And you have something to say also about market volatility under this new administration. Yeah. And I think it's pretty interesting.
Yeah, well, I think that there's, and I've certainly encountered a lot of people that, seem to really be upset with the volatility in the market. And they, maybe it's stopped them out of positions or it's just caused them to have a feeling that they don't know what the market's going to do. Well, like, to those traders, I would say, newsflash, you never knew what the market was going to do, right? You just felt like you had a sense of predictability because of the patterns. But, volatility is a day trader's best friend. So, like, if you are exercising tight risk control and then, the market starts to just dump excessively the other way, like hop on board and ride that trade back down, make your risk back and more, right? So, like, look at Friday as a great example. People probably try to go long near the highs again, for continuation. It didn't pan out. And it drops hard. If you caught any of that down move, you would have made far more than you would have on that up move, right? But I know...
much faster.
Oh, yeah. Much faster.
We never know when it's going to elevator or, escalator. Just sometimes you get lucky.
Yeah, for sure. You do. And, it would have been hard to stay in that thing the whole way down because there were some, sizable retracements, but the opportunity is there and volatility presents opportunities. But I also know that, without getting political, Trump is a polarizing figure. And, we've known this since he was elected that, the tweets or the posts, whatever they're calling them on X, that's in play, right? So we should be on the lookout for, Trump, tariffs, China news, etc. All of those things that, seem to really move the market in a sudden way. But for those of you out there who might, be thinking that, oh, effing Trump, right? He did this again. Now he's doing tariffs and he's screwing up the market and he's doing all that. What I would just suggest to you is, if it's Trump that you really don't like, learn to trade that volatility and capitalize on it. Because if you truly don't like Trump, is it not the biggest flex, like the biggest FU to him, to be able to capitalize on those market moves and make a boatload of money? Like,
yeah, absolutely.
You know what I mean? Like, use him to your advantage instead of trying to play the victim, because it's going to be a long 4 years for you if that's your mindset. So
yeah, and especially if you're short averse,
Mm-hmm.
And then I'm really interested to find out if there's a way to know what the White House press secretary's schedule is, because given how volatile the market will be after anything that they say, I would like to treat that time frame as important as like a CPI or FOMC news event. So that way, I want to be probably out of positions before then, and then wait to see when they start speaking, and then just kind of react after the fact.
Yeah,
I don't know if that's something we can do with a bot, or if there's just a way for us to find out what that schedule is. But it's something I definitely want to look into.
Yeah, for sure. I have that down too. Is like a, whether it's on the WhiteHouse.gov site or something like that. Just got to find her schedule.
Right.
And yeah, I think we were also saying too, that you briefly just touched on it there too, like just being, a one directional trader, right? Like the market is designed to go up, yes, but it does like look back through the history of the market, there are sizable pullbacks. So if you are short adverse, you don't want to trade the short side, I would encourage you to learn how to do it and try to find some setups that are repeatable, so that way you can capitalize on those moves as well and not be sort of left on the sidelines. Because, who knows? We could go into, a little, I don't want to call it a bear market, but a bearish rally for a couple of weeks where, maybe it's just downward move, consolidation, downward move. And I mean, what are you going to do? Just play those little pops in consolidation for the long side? Like, if the money's,
right. And frankly speaking, if you have a repeatable setup, there's no difference going long or short. They work in every direction.
Mm-hmm.
And I also think sometimes the people that might not want to short, it's because they missed, because they are already long biased, and then they missed the opportunities in the mornings. And then once the short opportunity comes, it's like, well, they're still long biased or whatever. But then they just can't pull the trigger to short.
Right.
So, and a lot of people like shorting because those the elevator price action feels more rewarding and faster. Like it seems most of the time when there's a sell off, it's just like boom. Versus when you're pushing up, we do have those big runs and the parabolic moves, but a lot of times it's a slower grind. It's slow and steady. So for people that are really getting that dopamine spike on the quick payout, the quick profit target, a lot of fast money in shorts.
Yeah, for sure. They just, and if you're prone to that dopamine addiction, like, oh, I just hit a win, I got to get right back in, be mindful of that and use the tools to your advantage. If you're trading prop, if you're trading on TOPSTEP, use that to your advantage. You hit a win, you hit a big trade, lock out for, an hour, go get up and whatever, right? Like, you don't have to continue to sit at the desk and just try to get the next one and the next one and every little piece and every little inflection in the market. If you caught a big trade, be thankful for the market paid you and move on for a bit. So
yeah, for sure. And like you were saying, the market's designed to go up, and if at the very least, just because of inflation, inflation, you look at any chart, it's always going up. So, but yeah, let's not limit ourselves to only being able to trade one direction, because I'm not going to say there's a 50% opportunity to short, but there's pretty much always an opportunity to short.
Yeah. Yep. For sure. For sure. And then, it won't be long, I think, either before we're having the kind of the opposite dialogue where, it could happen, right? We have a few weeks of bearish trend, and then we start to turn around, and now we're having, bullish trend day, consolidation, bullish trend day, and everybody, this is what happens to retail traders. They get stuck in the most, like the recency bias of I want to short, I want to short, I want to short, because you had those big dopamine hits, you had those big trades, you had those big moves, and it's like, yeah, but remember your system, right? Like if the chart is showing you long, you should be going long, because even in a bear market, it'll provide bull rallies that will just rip faces off and punish people and then just come right back down. And an hour later, after you suffered a big loss, you're like, damn it, my short worked now,
Yeah. No, I still suffer from recency bias quite a bit. I mean, I definitely like to play both directions when I can, but some days you just get those moves.
Mm-hmm.
And I forget exactly which day it was last week, but I had taken this long trade, and then we had a really big push down, but it was within my system for the EMAs to take the long position, so I did. But in hindsight, even though I was able to scale it and get good profit on it, it was actually within a Fibonacci retracement, and we didn't reclaim over that level. Mm-hmm. And then I actually ended up retaking the trade to stop out when it came back down the second time, and that's like, well, yeah, of course, Robbie, because it they couldn't reclaim that sell-off. Right. The fibs are part of my kit too, right? So, but because I had been long all day, sometimes you just forget.
Yeah, that recency got you. That makes sense. That makes sense. It happens to us all. So, we mentioned, I just mentioned quickly prop trading, and using the lockout feature on TOPSTEP. I think TOPSTEP's the best one out right now. I haven't tried them all, but my experience and what I've read and just my personal experience with TOPSTEP, especially coming from Apex, has been fantastic. TOPSTEP is really great. So one of the things that Robbie and I were discussing, and something that I worked on just quickly building today, so just so you guys have a visual, is utilizing TOPSTEP as a prop account to help yourself grow, but also to help yourself improve on trading prop, and kind of what trading prop can look like, and the path to profitability with prop trading. So we'll go ahead and switch over to that. So what I've done here is, and I hope you guys can see this all right, is I created 4 different tabs, and I'll run through them all really quickly. They have the same sort of premise that, it's a 50K account on TOPSTEP, $49 evaluation fee, $149 to get funded fee, right? So combined, you're looking at $198. And then what I did was, I assumed that every payout, just for the sake of argument here, we're looking at every payout is $1,000, right? And the reason I went for that is that you start with $2,000 worth of drawdown. So essentially, if you made that drawdown up, if you moved up $2,000, you would be able to withdraw half, and that's where I arrived at $1,000. So pretty straightforward.
Yeah, sounds good.
Yeah,
and plus, for somebody that's could be trading only maybe 5 micros or just 1 mini a day, and they're just trying to get $200 or $400 slow and steady, that's pretty achievable. And it's a pretty safe payout to take.
Right, exactly. And just for the sake of this too, assume that, each one of these is like a week, right? So the account number coincides with you trading like per week. So you're not flying through these accounts, and you're taking your time. But let's just start with the 33% pass rate on this one, right? So on this one, what I'm illustrating here is if you only pass 33%, or 1 out of every 3 evaluations to get funded, and then from getting funded, you're only able to withdraw out of 1 out of every 3rd funded account, when you get that $1,000 payout, even though it took you 9 evaluations and 3 funded accounts, you're actually still a profitable trader by $112. And that's what this graph is illustrating, that you were on this downward slope, you made that $1,000 payday, and now you're back in the green overall, right? But let's just say after you take the payout, you blow it, and you're kind of back to the same thing. 3 fundeds, 3 evaluations, get a funded, blow it. 3 evaluations, get a funded, blow it. 3 evaluations, get a funded, pass it, get another $1,000. So you actually reach a little bit higher. So you can see, like, kind of over time, you do have somewhat of an upward trend line. And then you see this pop here at the end. All I wanted to illustrate was that, like, if you don't blow that account, if let's say you get to the last one, and now you've gone through 27 evaluations and 9 funded accounts, but on your 9th funded account, you're actually able to turn that into your second payout on that one account. That drastically increases your profitability all of a sudden. Like, to the point where even if you went back to, it took you 9 more, it would again, like this, it would stair step down a little bit and then have a little pop, but you're up, right? And
And for a lot of people, even the small profit and loss that you're showing on that spreadsheet, it's difficult for a lot of people to even do that on their own trading options.
Right.
Like I know, you and I had been in this a little while, and we were losing that on a daily basis, right? Plenty of times.
Oh yeah.
And this is so much safer to just $50, try to just go in slow and steady, and try to achieve without oversizing. Just get the payout, and then one step at a time.
Yeah, and this is assuming that you only pass the evaluation a third of the time, and then only every third funded account yields you a payout, right? So
yeah,
let's move up to, let's just say, all right, maybe you graduate from this, or maybe just out of the gate you have a little bit more skill and you have a 50% pass rate. So at a 50% pass rate, what we're looking at here is, again, the same thing. Sorry, it says 40%. This should be 50. We'll correct that real quick. So if you 50% pass rate, right, that means, you have an evaluation account, you blow the first one, you pass the second one, but you blow that funded account, and then boom, you're on your fourth evaluation, you pass it, you get to a funded, you get the $1,000 payout. So you see that this has a much steeper sort of equity curve of you in an upward trajectory, right? So
right.
Same thing, and this is just assuming that every time you get a payout, you blow the account, you blow the next funded account, and then you get another one and you move on. Now, I know somebody's probably sitting at home thinking, well, Joe, you talk a lot about like blowing accounts. Like the whole goal is to not blow accounts. Of course, that's the goal, right? I'm just trying to be realistic here, and I'm not trying to set somebody up with like, look, you can have this parabolic equity curve by trading prop, because you're gonna blow accounts. Like it's gonna happen, whether it happens it's gonna happen from strings of losses, right? Or from just a psychological breakdown day. Like you get frustrated, you have a string of losses, you get frustrated, and you go in with too much size, trying to make it back quick, or you just do any number of those foolish things that us traders do when we're not thinking clearly, right?
Yeah, and there's no way that we could realistically show like the true percentage probability of whatever anybody's journey is going to be. But like you've done a really great job showing, all right, what if it was 30%? What if it was 50%?
Exactly.
So, you can use this as a goalpost for yourself to say, hey, look, I want to give this a shot. Let's see what I can do.
Right. And so if you're able to do this, by the time you get through about halfway through the year, you're looking at, making about $3,500, which, again, that's not a lot of money, but it's a start, right?
Yeah.
And remember the rule of 90s, okay? The 390 rule, which is 90% of traders lose 90% of their funds in the first 90 days. So, 90 days is about 3 months, right? If we go back to the 33% pass rate, on week 12 here, you'd be a little bit of red, but like if your initial starting investment was $1,000, it took you 888 in order to, this is it right here. This is the sum of all of the evals and the fundeds to get your first payout. It took you 888 to make that first 1,000 to be back in the green, right? So you're doing better than most traders are right here, right away. And also, too, I don't want to forget to mention that, when you sign up for your first evaluation, you don't have to trade that. TOPSTEP, allows you to have the opportunity to create a like basically another SIM account. And it's called a practice account. It's great. You can, fine tune your system, but also make sure you fully understand the platform that you're using. And that's for the $49 monthly fee. It's included, right? So you could do that for a whole week or two and try to do that and save your money as well. And actually, Robbie's got an even cheaper alternative. Yeah.
So I mean, that's a great start just to get in the door. But I mean, you could do the same thing for $50 a year. Basically, you can go to NinjaTrader.com, sign up for your own account there, do a one-time deposit of $20, and you pay for data. It's like $4 a month, and you have your own SIM account. Actually, multiples if you want. So you get one SIM account that's a cloud-based account. And you can use it through their web app or the desktop software, or even your mobile phone with the NinjaTrader app, and that's really cool too. But suppose you wanted to try like trading as if you had multiple accounts and spreading your risk. So like you can create multiple Sim 101 type of accounts locally, and then let's say you trade the primary one, and whether you win or lose for the day according to what your criteria is. And you feel like, okay, well, maybe I won for the day on that one account. And for my rules, I want to stop myself from trading for the day. switch to the next account as if you had, a different evaluation, or combine as TopStep calls it.
Yeah.
And then trade on that one. And then you can even use those accounts just to experiment. So like when you're first getting into futures, the price swings are going to be very different than what you've experienced in options and regular stock trading. And so it's going to take a little bit of time for you to figure out how the market moves and how fast and hard profit and loss comes. And you don't know what your base hit is yet. And so one really cool thing you can do with NinjaTrader is they have a really cool system of letting you make your own custom bracket orders. And one way I was able to find my own base hit was to make a template strategy where I would take a trade with 2 contracts, and then I would have either the same stop loss or 2 different stop losses, and then either like the same profit target or 2 different profit targets. And so what would happen is if I had a 50% win rate, then I knew which target was more consistent for me. But suppose you had a higher win rate than 50%, well, why don't you, bump up the profit targets on both of those, and then see once you get to that 50% rate, then kind of that's what your base hit is. And unfortunately on TopStep, you only have one sort of bracket order that you can put in, and it's got some quirks there too. But yeah, for $50 for the whole year, I mean, that is so cheap. Why not start that way first?
Yeah, absolutely. I think the biggest thing with prop that most people fail to understand is, they're looking for this Lambo money, right? And, slow is smooth, smooth is fast, and you gotta go slow, right? Like you have to crawl before you can walk, and you have to walk before you can jog, and jog before you're in a sprint and running long distances, right? Like, it really takes time. It really takes time. So
yeah, and on that token, I would urge people, whether or not they're going to start with the TopStep combines or do a NinjaTrader type, paper account, just trade small. Do the like 5 micros or 1 mini, and try to pass the account using the same rules as if you were on TopStep, with the end of day drawdown, and don't try to pass it as fast as you can, because there might be times when you can do that, but you're putting on so much risk. There's a lot of YouTube videos out there that are saying, hey, this is how I passed the TopStep, ABEX, or whatever they are, and they're selling you heavy on doing full size to pass them as fast as possible, because these guys are getting commissions or affiliate kickbacks on all those accounts that you're buying, and they're hoping that you're going to come across their video as some strategy that's going to make you a lot of money, and it's not. You're going to lose a lot more than you make, and you're setting yourself up for failure if you're going full size from right off the bat.
Right.
And I'm actually putting together a video about that, passing a TopStep combine 1 contract at a time, and that's going to be. I don't know when that's coming out, but it's coming soon.
Awesome. Yeah, we'll be sure to link that for sure, because that's exciting to watch. And those guys who are getting those affiliate commissions, man, they don't care about you. They don't care if you pass your combine. They don't care if you get, a payout. And that's the way of the world, right? Like, there's, snake oil salesmen and every industry, every business, right? It's very, very common in fitness, right? I know countless people ask me about, what about this supplement? What about that supplement? Blah, blah, blah. Like, you don't need all the supplements. You just need to eat and lift, right? It's the same. The basics, simple, principles apply to trading as well. So just to run you guys through like 2 more quick scenarios, what I did was just put together this one here. So this is just kind of, it's still the same rule of, you only pass 33% of your evals, and you only get a payout on 33% of your funded accounts. But the exception being that, like, once you get down like through here, you actually don't blow your funded account. So you get to the 3 funded, you get a little payout, and you don't blow it. And either you end up blowing one of the next 2 that you pass, or you blow the original one, whatever. But when it comes down to like being able to get the second payout, you actually have 2 accounts that are ready to get paid out. So you kind of get the double, and then you see that it triples, and you're growing your accounts, because your TopStep allows you to have 5. So you can see that the distribution, here of profits like continues to get larger and larger, right? Like see like bigger spike, etc., and then continuing to move on. And I did the same thing with the 50% one. So, you fail the first eval, you pass it, you blow that funded account. You fail the next eval, you pass the next eval, and then you get that payout of $1,000, but you don't blow this account, or maybe you do, and you don't blow the next one. But regardless, you just start getting up until you have the max accounts, and then you just look like you have $1,000 payout on all 5, and then you have $1,000 payout on all 5. And I mean, it's not that easy, but of course, as you become more skilled and you're better at managing your risk, and you're trading smaller, respectable, consistent size, you can do a lot with micros. And I know a lot of traders that I speak to who do well with micros. So
absolutely. And Joe, how would you say your trading has been boosted by your, like, how has your confidence changed over the course of the last couple of years once you passed your first eval combine and then got your first payout?
Oh yeah, like I think I've told the story a few times that I did have some bad advice. I will say I had some poor advice looking back, but I went through a lot of evaluation accounts, and then I was on Apex, so the rules were different. And looking back, I have arrived at the conclusion that I would have gotten a payout sooner if it wasn't for Apex's intraday trailing drawdown rule, which burned me plenty of times. And I think that burning me really, really affected my emotional state, and it led me to tilt sometimes. But of course, I think back on all of it positively, because I do feel like I was able to learn from that time period very well, and it helped accelerate my growth as a trader. But I was not good. I was not good at it to start. I'd be making money on options and just giving it back on prop. It took me 25 funded accounts on Apex to get my first $2,000 payout. Which, if you do the math, at $85, every time you wanted to fund one of those accounts, and even if we just assume they were on sale for 16, which they probably weren't, so equals 25 times, they were like $33, equals 85 times 25 accounts. So that first, assuming I passed all the evaluations, which I didn't, this is probably double that. I remember it taking me more than 2 payouts to be like, okay, I'm at break even now. And of course that sucks, but as more time went on, I passed evaluations even faster. So my win rate got pretty high. I remember the last time checking it was like over 80 something % that I would pass the evaluation. I don't bother with it anymore. Like I'm not concerned about it. And I think that's to me, that's a level of confidence too, that like, I'm not worried about the eval. Like I'm not worried about the $49. I got it,
absolutely.
Yeah.
And back when I was first dipping my toes in it, we talk all the time, but I would share my trades and stuff with you, and I was on the verge of switching between, like, if I wanted to do micros versus minis and stuff. And I had sent you several times a couple of trades where it's like, oh shoot, Joe, I accidentally took 10 minis
on Apex.
There were times where it's like, okay, cool, I got $1,200, $1,500 or whatever, and then obviously there was times where I lost that. And back then I could almost not even imagine that I could make that much money with a single contract. So it almost made me want the size. But now it's like, no, if you have the right system, if you have the right strategy, and you have rules that dictate what you're going to do, X, Y, Z, then absolutely that $1,000, $1,500 day is 100% possible with a single contract. And I'm not necessarily saying, one contract, one trade for the whole day. I'm talking, one contract at a time, but maybe a couple of trades a day.
Yeah, no, for sure, absolutely. And it's great what you can do in one con. Like in the House of Stacks, we're doing the one con challenge. It's awesome to see how many other people are participating in that. I know Maple took his first payout on his. He started a little bit after I did. I just withdrew my second one. So, and I'm taking half every time. I think the first one was maybe like around 1,300 before they took their 10% off, and the next one was around 12 and some change. I was just trading it light and just trying to clock the days in. But it's you could, that's a lot. That's doing a lot in a week. In my opinion. And a lot of times it was one trade for the day, and all right, I'd shut it down and mostly move on to trading the other accounts, which I'm trading 2, sometimes 3 cons, right? So But those are bigger built up accounts. I mean, the one con challenge is fantastic. You can do a lot with that, and you can do a lot with 5 micros as well, especially, as you grow as a trader and, refine your entries, refine your system, and you don't need as much of a drawdown window, right? Like, with micros are far more forgiving to take 5 micros and have a bigger stop for the same dollar amount. I mean, because, well, let's just math it out real quick, right? Like, if you have 1 micro and you lost 20 points, that's $40. So 5 would be $200. So right. you would have to, of course, commissions too, but you would have to lose 10 trades in a row like that in order to blow the account. And I don't know of anybody who's trading a system who says, yeah, I lost 10 trades in a row just trading my system. So
I would be like, well, I think you need to work on your system there, bud.
Probably so. And I mean,
but don't lose heart either, though, because you the spreadsheet you made to 30%. I still think it's maybe a little bit generous for somebody that's new.
Yeah.
But keep at it, because like we both said, once you pass the first one, it's going to come easier. Things are going to click in your head. Okay, this is what I did. That worked. And that actually reminds me of a quote. I've been reading this book called Wind and Truth. And I really I love that, how pretty much anything I'm reading, whether it's like fantasy or whatever, I find that I'm always able to apply it to trading. So let me see what that quote is. It says, okay, so it's from Wind and Truth, and it's called, "You aren't learning the same lessons, you're reinforcing them. In math, you can know a thing, yes, but it is the proof that teaches the deeper truth." So in this way, the proof is your trades. When you have a successful trade and you're writing down what you did to make that, to enter that trade and how it was successful, and you remember that, next time, it's going to be a little bit easier to take that trade.
Absolutely. Yeah, absolutely. Especially if you're putting the work in and you're studying and all that. For sure, man. Yeah, for sure.
Yeah.
One last bit of advice that I would have people too, for people who are trading on prop, right, is, especially keeping the same system that passed the evaluation is more than likely going to be the same system that's going to get you to the payout stage. And as you increase with your success rate and, all right, I passed the evaluation, now I passed the funded, hey, I got a payout on the funded, a lot of traders want to grow. And, one of the best and simplest ways to grow and move up to that 5 accounts that TopStep allows you to have is to start another evaluation account and just copy it with your funded account. Because, with your funded account, you're going to take, respectable trades. You're going to trade your system. It's, especially after getting a payout, people sometimes they do some erratic or irrational things and they start trading oversized and trying to pass that evaluation as quick as they can, and ultimately end up losing more money in the process because they blow more of them,
Yeah.
So you can, that copy trade feature, it has a lot of solid applications, especially if you're trading like 5 micros, 4 micros, this smaller position, and you just keep, chipping away at those base hits.
Yeah. Yeah. And like Ryan Holiday, I think it's Ryan Holiday, says keep the main thing. So if what worked to pass the combine, if that's working for you, then why are you changing it? So let's keep it consistent.
Absolutely, man. Absolutely. Yeah. So I think we've beaten the TopStep thing to death, guys. I think you understand. Just slow and steady. But hopefully those the graph, the numbers sort of help you out, and you guys get the picture at least of what I'm trying to say. That the growth potential is exponential with prop, and hopefully, once you're obtaining those profits, you're doing something wise with it and putting some money away for taxes too, because Uncle Sam will come around looking for you.
Yeah, and guys, we're not financial advisors. This isn't financial advice. This podcast is for purely entertainment purposes, of course. But if you're gonna do something like this, be responsible. And if you need advice, contact somebody that is capable of actually giving you the right advice. But we're just a couple of guys on the internet, and who found our own personal successes, and we're just saying this is what we do because it's what we did.
Yeah. Hell yeah.
Yeah.
So, what are your plans for this week? You got anything pressing or any personal goals you're trying to work on this week, Robbie?
Well, I always want to try to keep in mind that I should journal properly, right?
Mm-hmm.
And this week, well, this past week anyway, there was a couple of days where I took some losses. One almost a nothing burger. It was a wash on the day, but then one day was just regular red day.
Mm-hmm.
And it's no big deal because those days happen. And for my rules, I have my max loss, right? But as I journal, some days I reinforce what I do just by rereading the notes, either out loud or even sharing with you. And so, like for instance, I forget which day it was, but I wrote, I had fear of losing, and perhaps it's my subconscious telling me that there's no setup, or maybe I didn't have confidence in the setup, and I had fear because I initially lacked confidence in the setup that I wanted to take. It was probably C tier at best, and when my true setup arrived, I had actually flipped and traded against it because I was wrong about my first trade. And so in my mind, I'd flipped sentiment to correct the wrong that I had done before.
Okay.
And that was the note that I made for that day. And so come Friday, I kind of found myself almost doing the same thing again. Like I started off the day with a solid base hit, a trade that I probably would take every day. But then I was a little bit eager to get back in. And so I was able to reset myself. I said, "Hey, Rob, come on, remember what you did the other day. To me, this looks just like a certain day from the past.
Yeah.
Just be a little patient and wait for the edge to present and hit that trade." And so, yeah, I reeled myself back in. I took a couple more trades, and it ended up being a great Friday.
Good job, man.
So I just want to do the same thing this week.
Sounds good. That sounds really good.
How about yourself?
Well, I had a great week actually. It was my best week of the year, thankfully. So I'm pretty happy about that. None of the days were stellar, but they were just all very consistent. There were a couple noticeable periods for me where I had hesitation and I let a trade setup go by. And so really just diving into that hesitation. And I think it just has to do with for one of the trades, I was just misinterpreting the structure, and I was like, well, we're right here. And I think that I was hemming and hawing about sort of the probabilities, are we going to do this or are we going to do that, versus just saying hey, wait, here's what the concrete evidence that I have is. So really just going to try to be mindful of that. And then Friday I was on stream in House of Stacks. So there was, one big trade that I hesitated on. And I think the majority of the reason that I hesitated on it, in review, is just because, I was on the mic and having that sort of pressure to, well, if I say that I took this trade, it's probable that other people may jump in as well. And mad respect to Maple for doing that every day and being transparent about the trades he's taken, win or lose, man. Yeah, for sure. For sure. And there were a couple trades that I did take that I said, hey, I'm in this or I'm doing that, but there was again just one that just based off of the setup and the structure, I was like, I could see this working, but I could see it not working, and I was thinking if it doesn't work, it's going to be a big L, right? And so I didn't want that potential risk out there, and partly for myself, but I think also partly just for the group itself. And so I think it's just something for me to review in terms of, well, in the future, do I take that and not say anything? Or, do I just wait, like I did? I have to kind of no two moments in time in the market are the same anyway. So, but really it just boils down to digging into the journal, digging into my emotions and my reactions to the market, and continuing to strive to understand that and getting better, and just maintaining a sense of calm. Right, I'm simultaneously rereading and listening to Trading in the Zone, which has been a good refresher. So it's been great. It's funny because I'm actually listening to it, but I'm much further ahead than what I'm reading. So it's cool because I've just recently heard this, and now I'm just reading it and catching up. So it's been kind of a nice way to get through that book, and I highly recommend it. And it's if you have Spotify, I know I have Spotify Premium, so it's available to me. I don't know if it's a premium only thing, but it is on Spotify as well to listen to for free.
Yeah, I forget about that sometimes. I didn't actually realize up until last year, because last year was a really big reading year for me. And I did find that there was a couple of books that were free through Spotify, so that's pretty cool. But on the same topic of journaling, Joe, we are going to be maybe doing a podcast episode in the future about journaling. And Joe and I have come across this pretty sweet journaling app. Joe, actually, do you think you can add that to the OBS to do a quick screen share?
Yeah.
And just show what it looks like?
Yeah, for sure. Totally.
Yeah, because guys, this is potentially going to take your note taking to like the next level. And I'm not going to sugarcoat it. It's a little nerdy, but it is really cool. It's really cool, guys.
Yeah. All right, so I'm going to show the podcast one.
Yeah, just do the 1 2 charts and then add Obsidian to as a window. There you go. Yeah.
Yeah. So I'm doing this like for myself too. So like I have, I'm really getting into different emotions and reactions and trades and kind of building this all out. But this is a pretty cool note-taking feature. And we're, obviously, tagging notes in our podcast and all that stuff. And first of all, too, I don't want to. Robbie was incorrect there. He said like we stumbled on it. Like this was Robbie's thing, and and now I'm like, I feel like a little like geeked out about it because on a personal note, I have notes everywhere. Like I have notes in a journal, which sometime I'll show you. It's up on the shelf right there. I call it my Grail diary, so to speak. For those Indiana Jones fans, you'll know exactly what I'm talking about. And so I have notes in there. I still have notes in the note app on my phone. I have Twitter saved posts from random people to review at a later date or whatever to just transcribe somewhere else. I've got tons of stuff in a personal Discord that, Robbie, you're the only other member in. So I have all these notes everywhere. So like I'm very intrigued at the idea of just putting them all into one thing. But this animation, dude, is so cool. Like the way it just strings everything together that we've got going on.
Yeah, so guys, this is like a note-taking system called Zettelkasten. And if you want to just look this up on your own without waiting for the podcast, look up Obsidian Markdown on YouTube, look up Obsidian, Zettelkasten, or whatever. You're going to find a whole bunch of different videos that talk about this. They're all going to be about a half hour to 1 hour long because there's a lot of concepts to go through. But the some of it is that you're just basically making a note. And then with the proper either hashtagging or linking, you're going to see all these nodes show up. And the more you use that node, you're going to see how different days relate to one, from one topic to another. And it's just neat, to see that graph that Joe just showed, how like it starts from day one, and then you see the nodes pop up, and then the links spread out and how they connect. And if you do that with your trades, your daily emotions, your journaling, your setups, like whatever you're learning, everything, a lot of it's going to be connected, and it's going to be a really cool way to go back and just like say, okay, what are my thoughts on fear? Mm-hmm. Boom, click on the note, and you're going to see which ones are all connected, and then either refine your notes or just rehash the notes that you took about those days, trade setups, or whatever they were. Mm-hmm. And a lot of people refer to it as their second brain.
Yeah, it's kind of cool, like the way. I mean, I'll just kind of quickly show mine. It's like it's very, very incomplete, but so you guys should be able to see it here. Like so, let's see. But yeah, it's kind of same thing. The way I just like kind of have this like set up, and I'm probably gonna play with it, change things around or whatever. But it's really cool the way it just starts to bring everything together, and then it just, I don't know. It's just cool the way you can dig into your own notes, and I don't know, it looks like a neural pathway. It's pretty sweet. So
yeah, 100%. So like we're stoked about this. It's a pretty cool thing to geek out on, I think. And I mean, what can you lose by spending 30 minutes to an hour to maybe try something that's gonna change the way you learn maybe, and maybe make things a little bit easier.
Yep. Yeah, for sure.
It's a Netflix episode.
Absolutely. Well, I think that's it for us this week, guys. Really appreciate y'all for watching. And
thanks. We're gonna see you next time. And per usual, like, share, subscribe, and if anybody has a question about anything, put it in the comments, because we're definitely open to making episodes dedicated on particular questions. And maybe we'll do a whole topic on it, or maybe we'll just do just a quick, answer to the question. But yeah, we're definitely down for that kind of stuff.
Oh yeah, and the comments and the likes will actually help us grow as well. They'll, YouTube does, I guess, kind of what is it called? It supports the algorithm, right? So it helps us grow the interaction. So we appreciate it, even if it's just a great podcast comment or something like that. We appreciate it very much. So thank you all for watching.
Yeah, 100%. Appreciate you guys. See you next time.
See you next time, guys.